Dear investor, welcome back to Investment Fund Analysis. Today we are going to analyze Global Asset Mixed Allocation Fund. So today we are going to analyze Global Asset Mixed Allocation Fund, what we call all-weather fund, and to see how we can manage our savings and defend in these unprecedented market conditions. But first, maybe let's have a look at a small review of the asset classes where we can invest today. And as you can see, cash is not a good choice. I would say cash is trash. You get negative return in most currencies. In euro, you're at minus 0.56% if you leave your money into the account, plus the bank cost, so maybe down to 1%. Let's not talk about Swiss francs, where we are at minus 0.70%. So definitely cash is not an alternative, could be an alternative, but just in the short term. Second, okay, what about bonds? Consider the conservative portfolio bonds, okay? Now you can invest in the best of the bond, the German Bund, 10 years, minus 0.45% return per year. So you know that if you're going to invest in 10 years, you're going to get your money back minus more or less 5%, and with whatever kind of inflation or money devaluation. So also is not a good alternative. Third, okay, stock market. Stock market today, after the big rebounds of the second quarter of 2020, look, S&P, we are almost at the highs, so it means valuations are definitely stretched, or I would say overstretched. So just the buy and hold on stocks could also be very dangerous and devastating. So this is just as a premise to see how, portfolio manager that are investing in all these different asset classes have been performing and could be performing in the near future, and where we can allocate money to defend ourselves. Because as central banks keep printing money, as I was saying before, to keep money in cash for a long period of time could be totally devastating. I mean, you could keep the nominal value of your money, but the buying power of your money will be completely destroyed by the time. So we are going to focus on Global Mixed Allocation Fund and their performance this year, just to see some of these managers, how they've been performing through the two phases of the crisis. And we have here a selection of 7 big funds, some very old houses or some very reputable Swiss universal banks, and how they're performing with their funds, the one that are selling to their investor, to their clients. And we can see that, performance, even with the second quarter big rebounds, are still very disappointing. So for the first 6 months of the year, we have funds that are down in between 5 and 10% on your money still. And this is M&G, which is, very good English asset manager. Their conservative funds and their dynamic fund has been doing very poorly. UBS and Credit Suisse are also still negative, in between 3 and 6% on their global allocation fund. And this has been quite disappointing, and then you will see after, because this is not just been this year, but in the last few years has been more or less the same. Nordea doing quite well. I mean, some of the best. I mean, as they're just down 2.5%, and we have only 2 funds that are positive, Carmignac and Masayume Fund. Second things, I mean, just to make an analysis going through the last, let's say, 2.5 years, since 1st January 2018, where we already had a very big down year in 2018 and a very good up year in 2019. So let's see how your money that has been invested with all these funds have been performing, and if you have at least made some money. And we can see that, unfortunately, still many of these big funds have negative return in 2.5 years. And more or less the same they've been performing poorly since the beginning of the year have been performing poorly on a 2.5 year period. I mean, through all these crises and rebounds. What I think is very interesting to see as well is how during this period, and probably especially, let's take this year, the funds have been performing. Here you can see on the charts very well a little bit the shape of the performance. These are all funds that have a daily NAV, so we could really follow on a daily basis how their investment been performing through the crisis. So you see the beginning of the year, we had some funds that were more aggressive in terms of equity exposure. Markets were still going up, and they've been performing quite well. Then, of course, there was months of March, which was for everybody very, very difficult. Some of them performed better, so they were protecting their investment probably, or having a bigger allocation to fixed income. And I would say Nordea and Carmignac did better than the other funds. But what is important as well, I mean, sometimes we have drawdown, we have to accept that there are drawdowns during some period of the life of a fund or of a portfolio manager, but how and when they've been recovering. Because, you know, some people, some investors have been panicking. So during the crisis, they say, okay, let's get out, let's sell everything, let's keep our losses. So the losses in March, maybe funds were down 10, 15. I mean, we have also M&G Dynamic was down almost 25% since the beginning of the year. So if you liquidate the fund at that time, you are going to crystallize your losses at minus 20, 25 on your overall wealth. That's terrible. So since then, I mean, we can see that some funds has been rebounding more quickly than others, taking advantage of the rebound in markets. And this is an element that we look very closely at Masayume Asset Management when we do our selection. We accept drawdowns, and sometimes we even buy in funds when they have drawdowns, and we like to see the recovery ratio, the time in recovering some losses. And I think that here, you know, Masayume Fund has been definitely quite good in coming back during the recovery time. And we see that months of June, you know, we had the market rising during months of May. So there, more or less, everybody was rising, except maybe Nordea. Probably Nordea was very cautious at the beginning, so they suffered much less during the crisis. As I was saying, probably the worst was around -6, -7. But then they kept their investments on a defensive side. So they could not take advantage of all the recovery. So practically from 15th of March, their performance has been stable around -2, -3%. And they're finishing the first half of the year at -257. Instead, you had other funds that have been taking advantage still for the May and June recovery of financial markets, and they could even climb into positive territory. So Carmignac and Masayume are positive since the beginning of the year. And now let's see, I mean, what's next? That's why I think it's very important that or you diversify and you have 2 or 3 funds at the same time that you invest, even if they are all global mixed allocations. So this could reduce the volatility of your returns, and maybe having managers that have a different investment style and a different approach. I mean, we know that, for example, Carmignac are very active in terms of hedging, currency, interest rates, or equities. Masayume is more short-term, active and flexible, and Nordea is probably more towards defensive investment and bonds allocation. M&G Dynamic, of course, has a bigger allocation to equity, so probably in very good markets they will perform better, but you have to expect a much higher volatility. So I hope that this, you know, Panorama is going to help you. So very important, focus on performances, analysis, analyze fund managers, return, investment style. And so we wish you good luck for the second part of the year. It's going to be tough again. Thank you. Bye-bye.